Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is March 25th, and today's episode is going to cover news of new rETH pitch deck. We're going to be talking about that. Halulu's post on Reddit and some of the discussion that it inspired on the Rocket Pool Discord. We're going to be talking about sentiment polls for the new votes, the inflation split, and a whole lot of other things as well. So let's get started.
10, 9, ignition sequence start, 6.
Okay, so this is the place to start today, and this is with a new pitch deck that has come out of the rETH Incubator Star Initiative, and this is Signal XU saying that, "Hi guys, the Rocket Pool rETH intro and pitch deck is now ready. Huge thanks to Sleety for providing the materials and the GMC for the review. The current version is available for community use. If you have any suggestions, feel free to share." So community use, that's Rocket Fuel. We're using it for the community. So let's go and have a look at it and see what is actually included in there. So let me actually change the screen so you guys can see a little bit more of it. So first things first that you'll notice right away is that Sleety's fingerprints are all over this with the design choices. It's just so clean and crisp, absolutely beautiful. I'm also getting a nice orange hue in my face from the amount of orange on the screen, but it says Rocket Pool's rETH is highly secure LST with deep liquidity. And then it says rETH is one of the best treasury reserve choices because it has decentralization, it's trustless, and DeFi integrations and deep liquidity. So then those three areas, these three areas are the main focus of the pitch deck. It says technical decentralization, governance decentralization, and decentralized token distribution. So then it says rETH has the most decentralized architecture among LSTs. And then there's node operators, how many node operators there are. Then it says that it has the most decentralized governance. Node operators can participate in governance and vote on protocol decisions. And then there's the voting power with the RPL. And then it says governance tokens are distributed to node operators contributing to Ethereum staking decentralization. And then that information is there as well. And then it says rETH is trusted by leading DAOs for Treasury ETH. It says so ENS has 13.4% of their treasury in rETH. Aave here, there's a tweet from Mark Ziller on the right saying Aave doesn't sell their ETH. We stake it with LSTs and LRTs, and then they mentioned Rocket Pool in there second behind Lido Finance. And then they also talk about the STAR program, what they have incentives for DAOs for rETH adoption. And then rETH is integrated with top DeFi protocols, offering a wide range of use cases and yield opportunities. And here you see things like Uniswap, OP, EigenLayer, and a whole lot more. And then it says take advantage of rETH today. Secure your ETH with the most decentralized liquid staking, passive yield while maintaining liquidity. Join and get rewarded through the Rocket Pool Star program. So I thought this was a really nice pitch deck. Some really good content in here. It's just straightforward to the point. It really leaves a lot to the person who's going to go to these different DAOs and treasuries to ability to really speak about rETH, but it's nice to have that information in one place. So hopefully there'll be lots of people using this pitch deck to go to different DAOs and pitching that they change some of their treasury into rETH. Hopefully some of them will listen and actually go and do that. Okay, in yesterday's Ethereum daily thread, which is the successor of rETH Finance, there's the Ethereum Reddit subreddit now, and on there they moved the daily thread from ETH Finance into the Ethereum thread. Halulu, one of our own, had an interesting post that I'm going to read out for you, and then we can kind of talk about some of the discussion in different places about it. So Halulu says, I'm noticing more and more recently that the mistakes Rocket Pool has made are very similar to Ethereum itself. He says, I don't even know whether to call them mistakes, but they're definitely decisions that have led to lower mined and market share than would otherwise have been possible. I will call them mistakes here because of their consequences, not necessarily because I believe the decisions should have gone another way. So this is a common long-term theme is lack of marketing and build it and they'll come attitude, as has been discussed extensively. All layer ones use their huge amount of VC money to lobby and bribe people into adoption. Ethereum doesn't do this. People either decide to use Ethereum on its own merits or they don't. And then he says Rocket Pool is quite similar. Most other staking protocols pay large incentives to DAOs, centralized exchanges, and dApps to hold or integrate their LSTs. Rocket Pool has always just relied on people choosing to stake with it because of its decentralized ethos. No ledger live integration, no short-term looping incentives, etc. In the early day, the DAO was even against incentivizing liquidity, though that one turned out to be unavoidable. A recent example is Arbitrum choosing to stake with Lido because of huge commission rebate. That means Lido doesn't even really make any money from the deal. In the aftermath, commission rebate. In the aftermath of the Bybit hack, it was also apparent that a lot of their ETH was held in ST ETH and even Mantle's staking token. Mantle then rugged the hackers when trying to unstake, which was somehow perceived as a good thing from the few reactions I have seen, when that ability shouldn't even exist, in my opinion. I can't really blame people for taking the money when they have a choice of which LSTs to integrate or to get a good offer for an exclusive deal, but it's still disappointing. The only way to get ahead seems to be spending huge amounts of money unsustainably. And then Hululo goes on to say another major mistake seems to be combining the lack of marketing with a priority to do things right over user experience. For Ethereum, this is chain fragmentation and lack of L1 scaling in favor of sustainable long-term scaling. For Rocket Pool, it's a lack of rETH withdrawal requests before Pectra, among other things. The reason is the same, not wanting to centralize the protocol even temporarily to make things easier, but the lesson seems to be that users don't care. User experience is king and decentralization is a secondary consideration, which also is a major reason crypto as a whole can't compete with Web 2 yet. And then Hululo finishes in this paragraph saying, having said all this, there is one significant difference. Ethereum has enjoyed a first mover advantage because it was the first smart contract blockchain. So Hululo says, so while it's losing dominance against other chains like Solana, it will likely still be in good enough position when user experience catches up that to regain dominance and win. I'm not so optimistic about Rocket Pool. If a year from now rETH has trustless withdrawal requests, does it even matter if the DAO doesn't have any money to pay for liquidity anymore and the protocol sits at 1% staking market share? While they both aim to be permissionless base layers for others to build on top of, Rocket Pool has never achieved the amount of traction necessary for that to materialize significantly. Also means that there is no additional protocol layer that may step up to promote the base layer on its behalf. And then here, a whole bunch of replies from people who are on this daily thread and not necessarily in the Rocket Pool community. He says, I met with Jasper, the Rocket Pool team at ETH Denver. So this was last year. He says, I wrote a starter white paper for a new product they could build. I shared it with the whole team for review and discussion. Jasper was supposed to help push discussion with the Rocket Pool community. They sat on it and did nothing. He says, I waited 8 months until I brought up the same idea at a VC brainstorm event. The VC team agreed it was the best idea of anything anything else they had, and they invested in it. Now another team is aggressively building it, and I'm advising. He says, why isn't Rocket Pool used by Coinbase and Kraken for staking to increase the yield on those companies that would take home? Do these companies not like profit? Why did a completely third-party team have to build XRPL? Why did my idea, which again has been vetted by a dozen people and invested in now for millions of dollars, not interest them? I promise it was value aligned with them. In my opinion, the Rocket Pool team, it just isn't hungry for success and adoption. This basically explains everything else you see. It's like they're working 8-hour weeks, coasting instead of driving for success. And then Logri said that the one that's actually easy to answer is why isn't Rocket Pool used by Coinbase and Kraken? He says that would imply running mini pools. In the initial design, they would have needed RPL to do this. Now that the requirement is gone, there's just no capacity because rETH demand is non-existent. Carving out an exception for them would not really have been compatible with the protocol's values. And then here another person says, did Linux ever need marketing? No, and most smartphones, most web servers, etc. And then there was like other talk about like client implementation. So this person is taking more issues with the Ethereum side of the comments rather than the Rocket Pool sides. Epic Trader says, he says it doesn't think he's right about Ethereum UX approach, not necessarily talking about Rocket Pool. Here, Tim with no tool belt says the biggest problem with Rocket Pool is 3 letters. So if they mean their token and the farming of the token is not complete, competed with Lido. So basically, this person is saying is that RPL is the beginning and end of Rocket Pool's problems because of the ODA being extractive before, then needing RPL to stake and people losing a lot of money, etc. He says, partially, I think what you might be getting at is that legitimate decentralization is hard and in many ways is not has not competed well with more centralized alternatives, though ETH is still the number one in its business by quite a bit. It says the biggest fallacy here is that realizing that ETH is still winning. Rocket Pool never was, only for the bag holders here shilling it who then watched it dump on everyone. And then Hulu said Rocket Pool actually did well for a while. It was massive, grew massively leading up to Atlas. Saying it was never winning seems harsh. The main flaw was bad tokenomics, but you couldn't really have done it without RPL at all. And then there's other talk about like precision of language. And then Wild Lockred says, it's been a while since I heard about Rocket Pool. That used to be aggressively shilled on Reddit. I guess people got tired of losing money and gave up. And then there was some feedback here, like Halulo said, basically it was a bubble within ETH Finance. A lot of people held RPL in ETH Finance, and that died when things didn't pan out as expected. And he says it's still mentioned very unrecommended pretty often in ETH Staker, but that has nothing to do with the token itself. So yeah, that was the discussion on the Reddit. In the Discord, however, the discussion was slightly different. So the person to share it in the Discord was Bossy, and saying when does RPL make a turnaround, if at all. Sell now, just bag hold to zero. People were like, talking about decentralization, and then the main thing that I wanted to show you all was Langa's actually replying to it. So he says, I'm happy to talk about any of these issues or sentiment in general. He said, I do think that Hulu is right in terms of DAO funding, which is why Dr. Doofus's post is so important about some funding from the protocol's ETH income later going to the DAO. And then Langas also says, I also agree that our choice to prioritize decentralization has tempered growth, but personally, I wouldn't want it any other way. We are the ones truly innovating. I believe that being decentralized will pay off in the long run. Additionally, over time, the barriers to competitiveness are being removed, such as scale, peg, regulation, relationships, etc. And says, my 2 cents on sentiment generally. Now I'm happy to be schooled. He says, price, all altcoins are down bad. And this is not specifically an RPL thing. My bare experience is that altcoins come down fast and hard, but when overall sentiment improves, they come back with face mental green candles. I really, truly hope that's the case for Rocket Pool. TVL, he says, the whole staking ecosystem has been retracing for the last 5 months, up until very recently when it's starting to recover. Market share, he says, we have lost some market share from what I can tell because of restaking and Binance's growth. And future, he says, Saturn is a big deal for Rocket Pool and RPL, particularly as the ETH price improves. Staking yields look excellent. He said, I've gone through a couple of bear markets, and like many of you, they feel like shit. There's a sense of despair. I'm happy to hear what people think, but I feel like there's a lot to be hopeful for. We can always improve though, and the community is already rallying around certain topics and concerns. And one of those, of course, is the STAR initiative that we talked about already. And then there was joking about people confusing RPL for XRP, which is Ripple. And then there was a whole lot of discussion that kind of went on. So, yeah. Gator said, we need to fix our ETH bottleneck issue. And Langa says that's definitely a challenge. I do think that overall staking ecosystem retraction, our ETH price and the peg are factors in the lack of demand. So I would expect that to improve as those conditions improve. We still need to drive demand though. This is targeting crypto native protocols, which is STAR, and improved DAO funding, integrations, protocols, wallets, new chains, streamlined chain strategy, and potentially institutions, relationships with people like Etherealize, etc. It says Saturn is a good anchor point for a decent re-awareness campaign. So hopefully, it'll be a good time to get our narratives in a line, the ducks in a row, and hammer those home heading into that Saturn 1 and Saturn 2 period. So yeah, let's see what happens with that. That discussion went on for a lot longer, and I contributed to a little bit later, and not sure was like what you're talking about, but you guys can read that, if you follow the links and just keep reading, trading from there. Okay, next we are going to talk about this new vote that is coming up and a sentiment check for that. And this is increasing GMC share of inflation vote. So there was an informal poll a little while ago, a couple of weeks ago, about which option which split option they preferred, and the choice was 50% for IMC incentives, 25% for GMC, and 25% for reserve treasury, and the vote for the ODAO share of inflation needed to go through before we could do this, and that has gone through now. So here's Cyfrin is putting through this idea for, I guess this will be RPIP 69 maybe, I'm not sure. The draft is live, so let's see what version is. Yeah, RPIP 69. Okay, nice. So yeah, this is a sentiment check for RPIP 69, and so far a few people have voted, 3 people, and all 3 of them think that this is good to go to a vote. So it looks like it'll be going to a vote. Cyfrin here says that given the current RPL price and its impact on the strength of the Treasury, the GMC has decided not to pursue an increase to the Global Committee stipend rate for the foreseeable future. Should this stance change, the committee will aim to communicate its new position with ample notice. So look out for that at some point. But yeah, do you think that this split should go through? Now is the time to do the sentiment check, and this will actually be an on-chain vote, and the parameters are set as such, so you can see the information there as well, which is really cool. Okay, note about Cyfrin's Rocket Pool rETH integration. The course is ongoing. According to the Cyfrin site, 500 users have taken the course already. I have no idea how they measure that, whether it's just people who have visited the page or people who have actually done one lesson or multiple lessons or all of it. I don't know exactly how they work that out, but that's actually really exciting. Reminder that there is a certificate available for this. This is called the Solidity Smart Contract Developer Certificate, SSCD. You can get you can get one of these certificates by passing the rETH course. Now, if you want to do this, there's actually a cost involved. With the pricing, there are options. The certificates start from $199 per exam. However, the GMC had a promotion where they were putting money towards the first 25. So 22 of those have been claimed now. So there's 3 left. So if you're interested in getting a fraction of your exam money paid, then come into the Discord and make your case. Okay, let's move on to some staking news now. Well, this is Ethereum news actually, no staking news today. And this is POTUS, who works with Prismatic Labs. And he says that this is personal take for Fusaka. Now, Fusaka is the hard fork that will come after Pectra. And here POTUS says what should happen is that forks should be scheduled with time horizon. Alcor Devs has long refused to commit to a timeline since the merge delays. However, not committing to a timeline drags development and is becoming particularly hard to coordinate among different teams and new ones coming when the teams prioritize different EIPs and signal different things. It says if you're not ready by then, we'll start testing without you. If you don't make it by the intended timeline, so be it. We need to learn to set realistic deadlines, and we should not expect all 36 client combinations to work at the same time. It's fine if some are left out. And then he says focus should be on testing. Scheduling the first DevNet early on should signal clearly what the EIPs that will be tested, where ETH Panda Ops will be allocating the resources. Fork DevNet should be scheduled as soon as some EIPs and SFID before implementation. I'm not sure what SFIs are, sorry about that. And it says we need to remove external dependencies. It makes no sense to go live on mainnet praying that doesn't closed source relays and builders have tested their setup or relying on circuit breakers. We need to test the MEV pipeline as core clients. And then he says, I think Fusaka should be aimed for release in late Q3 with only PDAS and possibly EOF if it is ready, nothing else, unless it's already implemented and tested in every client, and adding it to the testing schedule is a no-op. And then he says, if we don't commit to late release, a Q3, then we should include EIP 7732. It's the biggest leap in L1 scaling. No other contender gets even close to it. If it's being faded out of the irrational fear of changing the MEV status quo, and in some cases out of financial interests. So yeah, there's some really interesting points from POTUS. POTUS always has interesting points, but this idea of Fusaka coming in late Q3 with only PDAS, that's like hugely scaling blobs, doing peer sampling instead of making sure that everyone has the data, it's just peer data. And the EOF is that's kind of a controversial one, so I don't think that's been decided yet. But it looks like, there's more and more momentum behind this idea of get it set and get it out. Like no pussyfooting around, no long-term delays. As soon as one fork is done, like the second one should already be working on, which is what's already happening. And it looks like PDAS, should be coming within 2025, pretty much for sure. Okay, the World Liberty Financial, the DeFi protocol out of the Donald Trump team and Trump family has released a stablecoin. So they say Meet USD1, the stablecoin your portfolio has been waiting for, built for institutions and retail alike, backed by dollars, custodied by BitGo, no games, no gimmicks, just real stability. So this is a treasury-backed stablecoin, which is, they buy US government debt and they keep the rewards themselves, and they give a stablecoin to their customers, very much in line with USDT, what they're doing, except they have first mover advantage and all that kind of stuff. So it'll be very interesting to see what kind of growth World Liberty's USD1 gets. What's interesting here, like Vivek from Ethereum says, a financial services powerhouse built on Ethereum. So this token will be coming out on Ethereum and also Binance Smart Chain. But I believe the way things stand, the majority of it will be on Ethereum, which is pretty cool to see. So definitely keep your eyes open for that one. Also, bigger news potentially even than that is Custodia Bank and Vantage Bank have issued America's first bank-issued stablecoin on a permissionless blockchain, first ever tokenization of a US bank's US dollar demand deposits for a bank customer on a permissionless blockchain. So they got a press release. So this is also coming to Ethereum. It's going to be on Ethereum mainnet using the ERC20 token standard. And what's really funny here is Custodia Bank have historically been like a Bitcoin maxi bank and focusing very much on Bitcoin. So the comments here are actually really funny. If you have a look, some of the people are talking about, why is this not on the Bitcoin layer 2? Say it louder that you built on Ethereum, but other people are saying things like, is Ethereum even permissionless? With people like Predator, I don't know who this person is, but I guess there's some kind of Bitcoin maxi saying that this will have an admin function. And Predator, this Nelson here says Ethereum is permissionless, but not all assets on it need to be. As long as the foundation is permissionless, that's the main thing. It says, what functions do these contracts include? That will answer your question. And Predator replies by saying, no, ETH is a permissioned blockchain because of its security model relying on social slashing. And I recommend you read the official documentation provided by the Ethereum Foundation how the software works. So the Bitcoin maxis are here. Nelson says this Bitcoin saying Bitcoin is a permission blockchain because security model allows for contentious forking, which is equally false but also true and a good thing. It's indeed how blockchains work. And Predator said no, Bitcoin isn't secured by mob rulers that deny property rights from BTC holders they don't like, but keep telling yourself that BTC and ETH are secured the same way, buddy. And this person, of course, is completely missing out on the Bitcoin contentious hard fork that happened with the split with BTC, and totally forgetting that how that worked. But that's totally fine. The thing to focus on here is that Custodia Bank of Bitcoin maxis is building on Ethereum. So interesting. Anyway, here again, this is new type here saying LMAO, you guys choosing Ethereum rather than BTC L2, you clowns. And Ethereum adoption showing that there's a whole lot of adoption still happening and ongoing. Just in March alone, we have news of Custodia Bank, Fidelity, Line, Deutsche Bank, BBVA. I think those are from out of Spain. Bio, Nexus, Gene Lab, US government with their ETH reserves as well. So the Ethereum adoption is going on strong. It's looking really good. Vivek here then again says tokenized bank deposits built on Ethereum. So it looks like Etherealize are going to be pushing a whole lot of these products and products. I'm really excited to see how it all comes along. But yeah, I'm going to end today's episode on that note. So thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you all have a lovely day ahead, and I'll see you all tomorrow. Bye.